Welcome to the Deep Dive. Today, we're really getting into the weeds of intraday trading.
Yeah, focusing specifically on the U.S. index futures.
That's right, the US30, that's the Dow Jones tracker, and the NQ, the NASDAQ 100. We're looking at the market picture as of this morning, April 16th, 2025.
And the goal is really to unpack what's pushing things around today, the key drivers.
Exactly. And our main source here is a brand new report just out this morning. Intraday briefing, actionable insights for day traders.
Think of it like our map for the day. It covers the overnight action, key price levels, indicators, patterns, volatility news, all that good stuff.
So our mission really is to distill the most critical bits from that report for you, our listener. What's most likely to move the needle today?
Right. And whether you're actually in there trading or maybe you just want to understand what's going on behind the headlines in the U.S. stock market.
We're aiming to give you that structured overview. We want those aha moments, without drowning you in jargon or excessive detail.
Yeah, cutting through the noise. Let's try and connect the dots on what really matters for today's session.
All right, let's dive right in then. Yesterday's action and what happened overnight. The report suggests things started a bit mixed, but ended up pointing downwards.
Yeah, that's pretty much it. What's interesting is that on the 15th, yesterday, the US30 futures actually closed lower. Some sources say around 40,455, even though the cash index was a bit higher.
Okay.
But the really notable thing was the intraday movement. A high near 40,830 and a low around 40,156. That's a pretty significant swing for one day.
Wow. Yeah, a lot of push and pull there. And that selling didn't just stop at the end of the day, did it?
No, seems like it carried over. The report shows that downward pressure continued overnight. It traded down towards 40,280 initially, then drifted even lower, maybe near 40,209. Though the actual overnight range wasn't huge, kept between roughly 40,202 on the low side and 40,484 on the high side.
Okay, so a bearish lean there.
Yeah.
But the NASDAQ 100, the NQ, that was a bit different yesterday, wasn't
Right.
it? Showed some strength.
It did, yeah. Relative strength on the 15th. The report chalks that up mostly to tech, names like NVIDIA, Broadcom doing well.
Even while other big tech like Meta and Amazon were down.
Exactly. So tech was kind of holding things up for a bit there.
But that didn't last, apparently.
No, that relative strength kind of fizzled out overnight. The report points to NQ futures weakening quite a bit, dropping from mere, say, 18,977 down towards 18,527, 18,550 area.
Right.
And its overnight range was wider, too. Low around 18,504.50, high up at 18,735. So that initial split we saw.
Between the Dow and the NASDAQ.
Yeah, it pretty much vanished. Both ended up under pressure overnight.
So what changed? Why did they converge downwards?
Well, the report suggests it's the bigger picture stuff taking over. Those broader market worries probably. U.S.-China trade jitters, and maybe just nervousness ahead of today's U.S. economic data.
That makes sense. Sector stuff gets pushed aside when the macro worries flare up.
Exactly. Seems like those concerns are dominating the mood right now.
Okay, so a generally cautious, maybe even bearish feel overnight. Let's pivot now to those crucial price levels. The support and resistance points traders are watching today, kind of like battlegrounds, right?
Absolutely. For the US30, the Dow futures, that immediate resistance looks to be in the, let's call it 40,400 to 40,480 zone. That lines up with the overnight high and some key pivots.
Okay.
The report also flags potential retest levels slightly lower, maybe around 40,235, as a place price might revisit before heading further down. Above that, you've got 40,500, always a psychological level, those round numbers.
Right, people watch those.
They do. Then higher up, 40,600, 40,686, which is a classic R2 pivot. And of course, yesterday's high near 40,830, all potential stopping points for buyers.
And even higher.
Yeah, some analysts are looking way up towards 41,000, maybe 41,108 as a possible breakout area, or maybe even a spot to initiate shorts. And then longer term, 41,700 to 41,900 gets mentioned.
Wow, okay, quite a ladder of resistance levels for the Dow. What about the floor? Where might buyers try to step in, the support levels?
Right. On the downside for US30, the first stop is that overnight low, 40,202. Below that, the 40,000 to 40,087 area is pretty significant.
Psychological again, 40K.
Exactly. Plus, it lines up with a classic S3 pivot. Think of pivots as calculated potential turning points based on yesterday's price action. S3 is the third support level, often quite strong.
Got it.
Further down, potential targets are mentioned around 39,800 and 39,900, maybe 39,700 if things get really bearish. And a level flagged as critical is 39,612. A break there could mean more selling.
Okay.
Then you have even lower levels, like 39,130, 38,770, way down there. The report also gave specific intraday pivots, S1 at 43.99, S2 at 43.84, S3 403.63. And it's worth remembering the US30 did recently test its 50-day moving average on the 1-month chart that's often seen as major longer-term support.
Right, a lot to watch on the Dow. Let's switch gears to the NASDAQ 100, the NQ. Same question. Key support and resistance zones there.
Okay, for NQ, the initial hurdle on the upside seems to be 18,630 to 18,680. Again, aligns with some intraday pivots. Above that, you hit 18,700, another psychological point. And then the overnight high at 18,735. Keep going up, and the report flags 18,820 as a level to watch. Then the big 19,000 mark.
Another big round number, and potentially liquidity there.
Exactly. Psychological barrier, maybe a pool of orders sitting there. Beyond 19K, you've got 19,130, then a zone from 19,400 to 19,500, which could be the top of recent range. And then even further out, 19,492 up to 19,800, and a Fibonacci level near 20,084.
Fibonacci, right. Those mathematical ratios based on past moves.
Yep. And the intraday resistance pivots. R1 at 18,680, R2 18,694, R3 18,705.
So the NQ also faces quite a climb if it tries to rally. What about support? Where's the potential floor?
First level support for NQ is at overnight low 18,504.50. Just below that, around 18,500, T100, 309. And interestingly, the report really highlights a potential demand zone or order block down between 17,700 and 18,200.
What's the thinking there?
Well, those are areas where historically a lot of buying came in. So the idea is price might find buyers there again if it drops that far. Also, 17,900 is mentioned as quite important for the bigger picture bullish structure.
Right.
And way deeper, there's support around 16,300, 16,324, which was a previous significant low. Intraday support pivots are S1, 1,655, S2, 18,644, S3, 18,630.
It sounds like we're seeing a lot of different technical tools pointing to similar areas. Is that significant when things line up like that?
Yeah, that's actually a really good point. When you get that kind of confluence, pivots past high slows, maybe Fibonacci levels, demand zones, all clustering around the same price area, it suggests that many different market participants using different methods are all watching that same level. It increases the odds that the price will react there. It becomes a more reliable potential turning point, or at least an area where you'd expect some action.
Like multiple signposts pointing the same way. The report also included a technical indicator dashboard. What was that telling us about the US30?
Well, for the US30, looking at the hourly indicators early this morning GMT, the picture was pretty strongly bearish. Investing.com's summary was literally strong sell.
Okay.
The RSI, Relative Strength Index, it was near oversold, but still signaling sell. The MCD, another momentum indicator, was also saying sell. And the ADX, which measures trend strength, showed a strong downward trend in place.
So mostly pointing down.
Mostly, yeah. Most of the shorter-term moving averages were also signaling sell. But, and this is interesting, there were some conflicting signals from oscillators.
Oh, like what?
The stochastic oscillator was showing overbought, but the stochastic RSI was oversold. Oscillators try to identify those stretch conditions.
That does sound contradictory. How do you read that?
Well, yeah, it can be confusing. Sometimes in a strong trend, you get these divergences, or it could hint that maybe the trend is getting a bit tired, nearing exhaustion.
Like the engine sputtering a bit.
Kind of. It means you probably shouldn't rely on just that one signal. You need more confirmation from price itself or other indicators. It's also worth noting the longer-term 200-period moving average was still buy, and like we said, price did bounce off that longer-term MA50 recently.
Okay, so for the Dow, a bit of a mixed technical bag. Short-term leaning bearish, but maybe some underlying longer-term support in the picture.
Yeah.
What about the NQ's technical dashboard?
Similar story, really. Hourly indicators for NQ were also screaming strong sell. RSI was sell, also getting close to oversold. MAD bearish. And the ADX was even higher than the Dow's, indicating a very strong downward trend.
Wow.
Most moving averages agreed sell. Only the simple 200-period MA was still a buy. And again, those conflicting oscillators, stochastic overbought, stochastic RSI, oversold.
So again, that short-term bearish pressure, but with those confusing oscillator signals. But the report mentioned something important about time frame here, right?
Yes, absolutely crucial point. While that hourly picture is strongly bearish, the report noted another source, probably looking at a longer time frame, like daily or maybe 4-hour charts, had a strong buy summary.
Ah, okay.
It just hammers home how vital time frame context is. A strong sell on the hourly might just be a pullback within a larger uptrend on the daily chart. So for NQ, the immediate pressure looks down, but zooming out, there might be a different story or at least potential support.
Right. Perspective matters.
Yeah.
And RSI divergence was also mentioned as a possibility. What does that mean for traders?
Yeah, positive RSI divergence. It's something traders watch for, especially on lower time frames when price approaches a support level. It happens when the price makes a new low, but the RSI indicator fails to make a new low.
So the momentum isn't confirming the new price low.
Exactly. It suggests the downward momentum might be waning, maybe fading. It could be an early warning sign that a bounce or reversal might be coming. The report mentioned it as something to look out for on lower timeframes for the Nasdaq and other assets, even if it wasn't obvious on the hourly charts we just discussed. Something to monitor today.
Okay, got it. Now, moving beyond levels and indicators, the report also discussed some observed intraday patterns. What kind of shapes or structures are people seeing?
Well, several things were mentioned, but the report rightly adds a note of caution. Pattern recognition can be subjective,
True.
Confirmation is key. Yeah, things like ranges and consolidation phases were noted, especially for NQ. Bands like 18,700, 19,500, or 18,200, 19,400 were highlighted as potential sideways zones.
Okay.
For the US30, there was maybe a short-term ascending channel on the hourly chart, but the overnight selling probably broke that. There's also conflicting Elliott wave analysis out there.
Oh, always tricky, Elliott wave.
Tell me about it. Some analysts see more downside based on wave counts. Others still see potential upside, so no clear consensus there.
What else?
Those demand zones we mentioned, like 17,700 to 18,200 for NQ, are seen as potential pattern-based support. The possibility of a short squeeze was also floated.
Right, where shorts get forced to buy back.
Exactly. If sentiment gets too bearish and support holds, you can get that rapid upward pop. Some analysts are even drawing historical parallels, like comparing NQ's recent drop to Feb 2020 or looking at typical pre-CPI data setups. Wedge patterns were also mentioned.
Which can break either way.
They can. So the main takeaway on patterns is they can offer clues, maybe potential targets, but always wait for confirmation at those more objective support and resistance levels we talked about. Don't trade the pattern alone.
Solid advice. Okay, let's talk volatility and liquidity. What's the current state of play there? Is the market still jumpy?
Volatility is definitely still a factor. The hourly ATR 14, that average true range we look at for recent price swings, was around 122 points for US30 and about 93 for NQ early this morning.
So still pretty decent movement expected per hour.
Yeah, the report called it less volatility compared to some recent crazy spikes, but these are still significant intraday ranges. Plenty of movement. And the daily ATR figures from previous analysis were even higher, reflecting those big day-to-day swings we've been seeing.
And the VIX, the fear gauge, where's that sitting?
It closed around 30 yesterday, April 15th. Now, that's down from its recent highs, but historically 30 is still quite elevated. It signals that there's still a fair bit of stress and expectation of future choppiness in the market.
So even if the VIX itself has calmed a bit?
The actual price swings, the realized volatility have remained pretty large, those big daily ranges the report mentioned. It just underlines the need for careful risk management, especially for day traders.
Absolutely. High volatility means higher risk. What about liquidity? How easy is it to get trades done?
Generally, US30 and NQ futures are very liquid, usually means tight spreads, easy entry and exit. The report did make a couple of volume-related observations, though.
Like what?
Well, for NQ, some saw the declining volume during its recent rally attempt as a potential warning sign. Maybe the buying wasn't that enthusiastic. Strong volume usually needed to confirm a real breakout.
Makes sense.
And that falling open interest in NQ we mentioned earlier, that could also hint at less conviction behind the current trend, maybe longs liquidating. Interestingly, the report noted the bid-ask spread on US30 was around 15 points.
Is that wide?
It's relatively wider than you might typically expect for NQ in normal conditions. Spreads on both can definitely widen out during volatility spikes or around big news events. That means higher transaction costs and potential slippage.
Where your fill price isn't exactly what you expected.
Right. So traders, especially those scalping or doing very short-term stuff, need to factor in those spreads, maybe particularly on the US30 right now.
Okay, so volatility is still high, liquidity generally good, but watch those spreads, especially on the Dow. Let's shift to the really big drivers now. The news and the overall market mood, the sentiment.
Yeah, and the elephant in the room is definitely the US-China trade situation. It seems to be the dominant theme.
Even with that 90-day pause Trump announced.
Well, yeah, because China was specifically excluded from that pause. So tensions there are actually escalating, according to the report. Things like potential halts to Boeing deliveries, talk of significant tariffs going both ways.
Stuff that can really spook the market quickly.
Absolutely. Historically, these headlines cause sharp moves. Even just comments about negotiations can swing sentiment wildly. The report highlights the impact on specific sectors, autos, chemicals, aerospace, tech, but also the broader implications for the U.S. deficit, bond markets.
So major headline risk.
Huge headline risk. And algorithmic trading can just amplify those reactions, making moves even faster and sharper.
Right. So trade uncertainty is number one.
Yeah.
What else is moving things? Earnings season is on, right?
It is, yeah, it's picking up steam. We saw some okay reports from banks like Bank of America, Citi, but then J&J beat estimates, but the stock still dipped a bit.
Shows the beat isn't always enough.
Exactly. Market reaction is key. These Q1 reports are seen as really important this time, given all the uncertainty around tariffs and the economy. How are companies actually coping? Sectors like semis, financials, luxury goods are getting a lot of attention this week.
Any specific company news or analyst actions catching the eye?
There were a few downgrades mentioned: Albemarle, Dow Chemical, some others. Suggests analysts are getting a bit cautious on some names. Boeing stock felt some heat from that China delivery news. On the plus side, Palantir and Netflix saw gains.
So those sector differences are showing up.
Definitely. Tech showing relative strength recently versus some industrials, for example. Watching key sector ETFs and the big dogs like Apple, Microsoft, Nvidia, Boeing, JP Morgan, that can give you clues about underlying flows.
And the general feeling, the sentiment out there, what's the vibe?
It seems pretty mixed, honestly, and very fluid. Changes fast with the headlines, lots of short-term trading speculation going on. You look at places like TradingView, opinions are all over the map.
Long-term bulls, short-term bears. Right range traders, yeah. There's definitely a layer of caution, maybe even bearishness, stemming from those tariff worries and economic concerns, and some nervousness about, which news headlines to trust in this environment. Understandable. Okay, so a very uncertain backdrop. Let's look ahead to today's schedule, April 16th. What's on the economic calendar that could shake things up?
Today's pretty packed, actually. We already got inflation data from the UK and Eurozone earlier. UK core CPI was a touch hotter than expected.
Does that matter much for U.S. futures?
Not directly, but it feeds into that global inflation narrative that all the central banks are watching, helps set the context.
Yeah.
But the main event for the U.S. markets today is definitely the U.S. retail sales data for March. That's out at 12:30 GMT.
Right. And the expectation is for a pretty strong number.
Yeah, consensus is looking for a decent jump month over month.
Why is retail sales considered so critical right now?
Because it's a direct look at consumer spending, which is, the main engine of the U.S. economy. If the number comes in really strong, stronger than expected.
That means the economy's holding up.
Could suggest that, yeah. And maybe inflation stays sticky. That might mean the Fed feels less pressure to cut rates, maybe even stays hawkish. That could be negative for stocks, potentially good for the dollar.
And if it's weak?
A weak number could boost hopes for Fed easing, which might help stocks in the short term, maybe weaken the dollar. But it could also raise fears about an economic slowdown, so...
It's complicated. Could go either way depending on interpretation.
Exactly. The reaction could be complex, maybe volatile right around the release. Definitely the key data point today.
Okay, retail sales at 12.3 GMT is the big one. What else is on tap?
After that, we get industrial production, capacity utilization. Later, NAHB housing index, EIA crude oil inventories. These matter, but usually have less immediate punch for the index futures compared to retail sales.
Right. Any central banks today?
Yes. The Bank of Canada has its rate decision and monetary policy report, then a press conference. Big deal for the Canadian dollar, and could have some spillover effect on broader risk sentiment.
And crucially, Fed speakers. We always watch for those.
Absolutely. Fed Chair Jerome Powell is expected to speak today. The exact time isn't confirmed, but the market's anticipating it. We also have Fed's Bowman scheduled later this afternoon, GMT.
And Powell's words carry huge weight right now.
Immense weight. Given the volatility, the inflation picture, any hints from him about the outlook, policy path, even his take on trade impacts the market will hang on every word. Huge potential to move markets. Even subtle shifts in tone can cause big swings.
Okay, so a potentially massive day with retail sales and Powell comments as the headline acts.
Yeah.
So pulling all this together, the levels, the indicators, the news, The report laid out some possible intraday scenarios for US30 and NQ. Let's start with the US30. What are the potential paths today?
Okay, for US30, one scenario is just bearish continuation. If it can't hold above that, say, 40,450 pivot area and breaks below the overnight low around 4,200.
And look out below.
Potentially, yeah, it could target those lower supports we talked about, 40,000, maybe 39,800, especially if we get bad news on trade or really strong economic data that scares the market about Fed hikes.
Okay, that's the bearish case. What else?
Scenario two is maybe range-bound trading. If the news or data is kind of neutral, maybe US30 just chops around between that 40,200 support and the 40,420, 40,480 resistance area. Short-term traders might play the edges of that range.
And the bullish case, a reversal.
That's the third possibility. If support around 40,200 holds firm, maybe we see some kind of basing pattern form, perhaps helped by weaker data or some dovish hints from Powell. That could lead to a bounce targeting those resistance levels, 40,500 to 40,600, maybe even back towards 40,830.
So down, sideways, or up, really depending on those key catalysts hitting those key levels. What about the NQ? Similar scenario.
Pretty similar logic, yeah. Bearish continuation is definitely on the table for NQ given the overnight drop in those bearish hourly signals. A break below 18,500, the overnight low area.
Could open the door to 18,300 or lower.
Could do, yeah. Maybe down towards that 18,200, 18,060 zone if momentum stays strong downwards. Or if the macro news is negative, again, like the Dow, NQ could also just get stuck in a range.
Maybe between 18,500 and, say, 18,700 area.
Roughly, yeah. Maybe 18,500 up to that 18,670, 18,735 resistance zone. But the report really stresses, given the strong downward momentum recently, fighting this trend is risky. You'd need very clear confirmation of a turn.
Right, and the bullish reversal scenario for NQ.
It would likely involve defending that 18,500 support area, seeing signs of downward momentum fading, maybe that RSI divergence we talked about, and getting a boost from dovish data or Fed comments. Targets would be back towards resistance at 18,735, 18,820, maybe even 19,000, but again, needs confirmation. Longer-term bullish ideas need support from the actual intraday price action.
So for both indices, it really comes down to how price reacts at these critical support and resistance zones when that key data hits and if Powell speaks.
That's the crux of it. The report really hammered home those specific price zones as the places to watch, and it underlined the risks, headline risk from trade, the retail sales reaction, Powell's potential impact, and just the generally elevated volatility. It also noted NQ is particularly sensitive to rate expectations, and you need strong evidence to fade its current downtrend.
Okay, fantastic breakdown. We've covered a huge amount. Let's try and wrap it up with the main takeaways for today.
Sure. So the big drivers today. Number one, U.S.-China trade uncertainty that's still hanging over everything. Number two, the critical U.S. retail sales data at 12.3 GMT. And number three, potential market-moving comments from Fed Chair Powell.
And tactically,
keep a very close eye on those key support and resistance levels we outlined for both US30 and NQ. How price behaves around those levels, especially in reaction to the news and data, will likely dictate the direction for the rest of the day and offer potential trading signals.
Great summary. And now just a final thought for you, our listener, to chew on. Given this mix of conflicting technical signals we've heard about and how jumpy the market is to news, what kind of approach might you take today?
Yeah, maybe you focus on waiting for real confirmation, like strong volume if price breaks a key level.
Or perhaps you wait to see the market's first reaction to the retail sales data or Powell's comments before you actually jump in with a position. Let the dust settle a bit.
Just something to consider as you navigate today's potentially choppy waters.
Absolutely. Thanks for tuning in to this deep dive.